All right. Welcome to Weekend Hustlers, everyone. Pavlov here, and I'm joined as always by Nikita.
Hey, everyone.
So, Nikita, someone sent us this really interesting report, the India Venture Capital Report 2025 from Bain and Company. Clearly, they're interested in getting a handle on the Indian VC space.
Yeah. Super interesting stuff going on over there. So much potential.
Totally. I mean, there's always been a ton of buzz around the Indian market, but this report is packed with numbers, trends, the whole 9 yards. So we figured, why not dive into it and break it down for everyone?
Exactly. Get past the jargon and really extract what matters for our listeners, the key takeaway.
For sure. So we're talking the overall investment landscape, hot sectors, investor activity, how they're raising funds, and the exit strategies. We're going to cover it all.
Yeah, we're basically giving you the inside scoop on all this data, right? Without having to wade through a massive report yourself.
Exactly. So let's jump right in, shall we? Let's start with the big picture, the India VC deals landscape.
All right, deal landscape it is.
So one of the first things that jumped out at me was this significant recovery in 2024. VC and growth funding hit, get this, $13.7 billion.
No!
That's a 1.4 times increase compared to 2023. What's that tell you about the market's momentum?
Well, I think that's a huge sign of renewed confidence after a kind of cautious year. People are ready to put their money back into Indian ventures. They're seeing opportunity outweighing the risks. And get this growth in India, it totally outpaced the rest of the Asia-Pacific region, which basically flatlined.
Wow, really?
Yeah, so that makes India, drum roll please, the second largest VC destination in the entire Asia-Pacific.
Second largest, that's massive, but it's got to be more than just a few huge deals driving that number, right?
You're totally right. It's not just the big fish. We're seeing a massive surge in the sheer volume of deals, jumping from 880 in 2023 to a whopping 1,270 in 2024. That's about a 45% increase.
That's a lot of deals.
And it's the small and medium-sized ones, those under $50 million, that are really fueling this growth. They also saw a 1.4 times increase. Lots of early stage and growth stage action happening.
That's healthy, right? Lots of new blood coming in. Of course, the bigger checks are still being written.
Oh, absolutely. Those deals over 50 million, they practically doubled.
Yeah.
Shows that investors are still ready to bet big on companies that are showing real traction and potential to scale.
Makes sense. Think about Zepto, Misho, Lenskart. Those guys are pulling in serious investments.
Exactly. They're proving themselves and investors are taking notice. But here's something interesting. While we saw those mega rounds, over $100 million increase in number, their average size actually dropped by 20%.
Wait, really? So more mega rounds, but for less money? That's kind of counterintuitive?
It is, right. I think it shows that investors are being a little more cautious about valuations. They're still willing to make those big bets, but they're doing it with a bit more price sensitivity.
So a little more grounded in reality than maybe in past years.
Exactly. More disciplined. But hold on, even with this shift in valuations, India still saw 5 new unicorns pop up in 2024.
5. That's impressive.
It is, right? So even with a bit more scrutiny on valuations, the potential for huge growth in those billion-dollar valuations is still very real.
Absolutely. And, thinking about the global stage, how does India stack up in terms of its share of VC funding?
Well, let me tell you, India's share in the Asia-Pacific region actually went up by about 6 percentage points.
Oh, wow. To what, 20%?
18% to be exact. And globally, India snagged a slightly larger piece of the pie as well.
So they're accounting for what, maybe 5% of global VC deployment now?
Close, around 4%, which, isn't a small feat. It really shows how India is becoming a bigger and bigger player in the global VC market.
It's interesting how this report kind of breaks down the activity into phases. There's the initial optimism, then recalibration, the COVID hit, and now this recovery. What do you think is fueling this bounce back?
So a few things are happening here. First, there's a ton of dry powder sitting around.
Yeah.
That's uninvested capital just waiting to be deployed.
Right, like funds raised but not yet put to work.
Exactly. And then you have the quality assets, meaning companies with solid fundamentals ready to attract that capital.
The good stuff that investors are actually excited about.
Exactly. And then, there's been this recalibration of valuation expectations, which is good, right? It's making things more realistic and aligned between founders and investors.
Right. Everyone's kind of on the same page now.
Exactly. And finally, the easing of global monetary policies has made more capital available for these kinds of investments. So all of these things coming together are creating this perfect storm for a bounce back.
So it sounds like while the average deal size stayed pretty stable, The real action was at the earlier and later stages, right?
Yeah, seed and Series A deals continue to be super popular, making up like 82% of all the deals.
Wow, that's a huge chunk.
It is. And they grew by a solid 1.3 times. But what I found really interesting was that mid to late stage deal volumes, so those Series B and beyond, they saw even stronger growth. They actually bounced back to 2022 levels.
So investors are getting more comfortable with those later stage companies, the ones that have proven themselves a bit more.
Yeah, they're seeing the potential for scale and long-term growth in those more mature Indian startups.
Makes sense. And those really big rounds, the mega rounds and medium-large deals, those also made a comeback. What drove that?
Those larger deals, so the 50 million and up crew, they definitely came back strong. They're back to pre-2021 levels. And the biggest factor, a massive fourfold increase in those 100 million plus deals in the consumer tech sector.
Oh, wow. That's got to be saying something about investor confidence in consumer-facing businesses in India.
Absolutely. That's exactly what it's saying. And if you look at the top 10 most funded companies in 2024, 9 out of 10 are in consumer tech.
No kidding. So who are we talking about here?
Well, you've got your big names like Zepto, Meesho, Rebel Foods, Rapido, and Farmeasy. They pulled in some serious cash.
Makes sense. And it's not just those big metro areas getting all the attention, right? Seed funding beyond the top 3 cities remained pretty strong.
Yeah. What's really cool is that investors are increasingly interested in those tier 2 and 3 cities. It's like they're realizing, hey, there's a goldmine of talent and opportunities outside the usual hubs.
Lower operating costs probably don't hurt either.
Exactly. And there are growing angel investor networks popping up in these areas. Plus, you're seeing more success stories coming out of these regions, which is further boosting investor confidence. And the government, they're backing this whole decentralization of the startup scene.
That's great to hear. So, okay, we've got a good picture of where the deals are happening. Now let's talk about where the money is actually going, the investment themes.
All right, let's follow the money trail.
So 2024, what were the hot areas?
Well, consumer tech, software, and SaaS, including generative AI and fintech, they were still the big players.
Those seem to be the perennial favorites, right?
They really are. They grabbed about 62% of the total funding, pretty similar to the previous year. But within those categories, there were some interesting shifts. Consumer tech's share increased quite a bit, while fintech actually saw a slight dip.
Consumer tech really seems to be having a moment. What specifically within that sector was grabbing investors' attention?
Oh, it was a huge year for them. Funding in consumer tech shot up by like 2.3 times, hitting $5.4 billion.
Wow. What was driving that growth?
A big part of it was those huge $100 million plus deals in areas like business to consumer commerce. Quick commerce was a major standout there. And then there's travel tech, gaming, and ed tech.
Makes sense. India's got such a massive consumer base, it's only going to grow, right?
Right. Investors are definitely betting on that. And within that B2C commerce sector, quick commerce is like the hot new thing.
Why is that? What makes it so attractive right now?
It's all about speed and convenience, right? Quick commerce is seeing crazy fast adoption by consumers. And the business models in this space are evolving to be more sustainable. But here's the clincher. Some of these players are actually showing a clear path to profitability.
Ah, so that's what's got investors drooling. Profitability.
Exactly. It validates the whole model and makes it a super attractive area to invest in.
So what about software and SaaS? How did that sector do?
They were up too, although a bit more moderately compared to consumer tech. Funding grew about 1.2 times, reaching $1.7 billion.
Not too shabby. What was driving that growth?
Well, businesses are spending more on digital transformation tools. That's definitely helping. Plus, Indian SaaS companies are finding success in international markets, which is a big deal. And there are more mature, scalable SaaS businesses emerging in India, making them attractive investments.
Okay, so we've got the consumer side, the software side, and of course, we can't forget about generative AI, the buzzword of the moment. How did that fare in India?
Generative AI was definitely a hot topic in India. Funding increased by like 1.5 times.
So it's catching on there as well.
Totally. But what's interesting is that most of the investor interest is focused on applications and platforms that leverage existing AI models.
So less about building the core technology, more about finding practical uses for it.
Exactly. They're trying to solve specific problems and create new use cases. It seems like that's where they see the most immediate opportunity.
Makes sense. But you know what I found really interesting in this report? It's the growth in some of those traditional sectors like banking, financial services, insurance, BFSI, and consumer retail. I wouldn't necessarily think those would be the hottest areas for venture capital.
Right. You think all tech all the time.
Exactly. So what's the story there? Why are these sectors attracting so much attention?
Well, it's all about the fundamentals. These traditional sectors have huge potential for growth in India. There are massive markets that are still untapped, and the long-term economic trends are really favorable.
So there's still a lot of room for disruption and innovation in these sectors.
Absolutely. Like in BFSI, we saw significant investments in non-banking financial companies, particularly those focused on affordable housing and green financing. And in consumer retail, segments like food and beverage and fashion are seeing a lot of activity.
So it's not just about tech anymore. It's about finding opportunities wherever they exist.
Exactly. Investors are realizing that these traditional sectors can be just as exciting and profitable as the latest tech trends.
Okay, so we know where the money went. Now let's talk about who's writing those checks. What's the investor landscape looking like?
All right, let's see who's holding the purse strings.
So in 2024, who are the big players?
Well, you still had your usual suspects, the established venture capital firms and private equity firms. They were definitely active.
Right, those are always going to be around.
Exactly. But what's interesting is that their overall share of the investments actually decreased a bit.
Oh, really? So who's filling that gap?
Well, we saw a rise in family offices getting involved. Also, newer VC firms, sometimes called emergent VCs, and corporate VCs are stepping up their game, especially in those larger deals, the $100 million plus ones.
So it's a more diverse group now, not just the traditional VC players.
Exactly. Almost like the playing field is leveling out a bit.
That's pretty cool. So we still have the big names, but there are new faces at the table too.
Yeah, it's an interesting mix. While firms like Accel, Elevation, Lightspeed, and Z47 were busy doing their thing and actually increased their deal volume, some of those crossover funds, like Tiger Global, seem to be more focused on supporting their existing portfolio companies.
Makes sense. You got to take care of your own, right?
Exactly. And guess who's back in the Indian startup scene after a bit of a break? SoftBank. But they're playing it a bit safe, only investing in companies they've backed before.
Interesting. So what about the overall fundraising environment? Did we see a lot of activity there in 2024?
Actually, fundraising actually saw a pretty big drop, like 35% down to $2.7 billion.
Wow, that's a steep decline. That's the lowest it's been since, 2020?
Yeah, you got it. I think it's because there's so much of that dry powder still out there, that uninvested capital. Funds have plenty of cash on hand, so there's less urgency to raise more right now.
Makes sense. They're probably being a bit more cautious too, given the economic climate.
Yeah, exactly. So we saw a decrease in the number of funds being raised and also a drop in the average size of those funds.
So less money being raised overall, smaller funds too. But here's something interesting. Even with this fundraising dip, domestic VCs seem to be focusing on those newer emerging sectors, right?
That's right. Even though their overall share of the fundraising pie was smaller, they actually increased their investments in sectors like agriculture, defense, and deep tech.
So they're looking beyond the typical tech plays.
Yeah, they're thinking long-term, betting on sectors that might take a little longer to develop, but could offer huge returns down the road.
And that's a good sign, right? It shows a maturing market. People are willing to look beyond the quick wins.
Absolutely. It shows sophistication and a willingness to take calculated risks.
Okay, one last thing on fundraising that I thought was pretty cool. The rise of those maiden funds. What's the story there?
Oh, yeah. Maiden funds are those first-time funds launched by brand new teams or firms. They're like the fresh faces on the scene.
So new kids on the block, bringing in fresh ideas.
Exactly. And they were a big deal in 2024, accounting for like 28% of the total fundraising.
Wow. So a lot of new players are entering the game.
Yeah. And what's really cool is that a lot of these maiden funds are started by people who don't come from that traditional venture capital background.
So who are they?
Well, you've got successful tech founders who've been there, done that, and now they're turning into investors.
So they're bringing that real-world experience to the table.
Exactly. And you also have experienced operators, people who have run successful businesses, and now they want to help others do the same. It's great because they bring in these new perspectives, different investment strategies, which really shakes things up and makes the whole ecosystem more dynamic.
That's awesome. All right, so we've talked about who's investing. Now let's talk about how they're cashing out the exit strategies.
All right, let's see how they're making those big bucks.
So what did the exit landscape look like in 2024?
Well, overall, exit activity remained pretty stable, around $6.8 billion.
Okay, so not a huge jump or dip in the total amount.
Right. But here's the thing. The types of exits we saw shifted big time. Public market exits stole the show, accounting for a massive 76% of the total exit value.
Whoa, that's huge. That's up from like 55% the year before, right?
Exactly. Public markets are back in a big way.
So what's driving this surge in public market exits?
Well, initial public offerings, IPOs, were on fire. We saw a 7-fold increase in IPO exit value.
7-fold. That's insane. What's behind that huge jump?
A bunch of factors, actually. There's more liquidity in the stock markets, tech valuations have recovered from those dips we saw earlier, and some positive regulatory reforms have made it easier for companies to go public.
So it's a good time to be going public.
Exactly. And there was a whole backlog of companies that were just waiting for the right moment to launch their IPOs. Now seems like that moment is finally here.
That's awesome. And I remember seeing something about secondary exits also picking up steam.
Yeah, secondary exits also saw some growth, increasing by 1.6 times in value.
And what are secondary exits again, just to remind everyone?
Sure. Secondary exits are when existing investors or employees sell their shares in a company, usually to another investor. It's like they're cashing in on some of their gains before the company goes public or gets acquired.
Okay, makes sense. So more of those are happening, and they're getting bigger too.
Exactly. Especially in the consumer tech sector. It shows you that the ecosystem is maturing, more opportunities are opening up for early investors and employees to reap the rewards of their investments.
That's great to hear. Now, what about those strategic sales? I remember reading that those actually declined.
Yeah, you're right. Strategic sales, which are usually acquisitions by larger companies, actually saw a significant drop after a strong performance in 2023.
Interesting. Any thoughts on why that is?
It's tough to say for sure. It could be a general slowdown in mergers and acquisitions, or maybe those strategic buyers are just being a bit more cautious in the current economic environment.
Okay, makes sense. So fewer companies being snapped up by those big corporations. Anything else noteworthy on the exits front?
Well, buybacks were pretty much negligible, so not much action there.
All right, no buybacks to report. But I do want to go back to those IPOs for a second because they were such a big part of the exit story. Were there any particular sectors that were really hot in the IPO market?
Oh, yeah. We saw a lot of IPO activity in consumer retail, fintech, and healthcare.
Makes sense. Those are all sectors we've already talked about being pretty active in terms of funding and overall growth.
Exactly. They're attracting a lot of attention, and investors are excited about their potential.
So 17 IPOs in 2024. That's up from only 6 in 2023, right?
You got it. A huge jump. And it seems like this momentum might keep going. The report mentions a bunch of companies that are lining up to go public in 2025.
That's awesome.
Yeah.
It really shows you that the Indian startup ecosystem is maturing.
Yeah, it's becoming more sophisticated, and companies are reaching that stage where going public is a viable option. And a lot of that has to do with those positive economic factors we talked about earlier.
Right. Things like controlled inflation, stable GDP growth, consistent government policies, all of that is giving investors confidence. And then you've got the performance of those major Indian tech stocks.
Exactly. They've been doing pretty well recently, which is a huge boost for the overall IPO market.
Right. Success breeds success.
Yeah.
Investors see those companies doing well, and they're more likely to jump on board with other IPOs.
Makes perfect sense.
Okay, so we've covered a lot of ground. We've talked about deals, investments, exits, and the overall investor landscape. As we start to wrap up this deep dive, what are some of the key takeaways, the big shifts in the startup ecosystem that people should be paying attention to?
All right, so let's sum it all up. One of the biggest shifts we're seeing is this increased focus on those traditional sectors like banking, financial services, and insurance, and consumer retail.
Right. We talked about that. It's not all about tech anymore.
Exactly. The fact that deal activity in those sectors is actually outpacing some of those traditionally tech-heavy areas is a big deal. It shows that investors are recognizing the huge potential in these more established industries.
So opportunity is everywhere. You just have to know where to look.
Exactly. And another big shift we're seeing is the emphasis on profitability.
Right. It's not just about growth at all costs anymore.
Exactly. Startups are realizing that they need to show a clear path to profitability if they want to attract investors and succeed in the long run.
So a more sustainable, mature approach is emerging.
Totally. And we can't forget about the role of the government in all of this.
Right. The regulatory environment is becoming more supportive of the startup ecosystem.
Exactly. Things like the removal of the angel tax, the reduction in long-term capital gains tax, all those changes are making it more attractive for people to invest in startups.
So it's becoming easier for those early stage companies to get the funding they need.
Exactly. And then you have those changes to the regulations for foreign venture capital investors and the foreign exchange management rules. All of that is making India more appealing to international capital.
So it's opening up the doors for more foreign investment.
Exactly. And one last thing that I thought was really interesting, this trend of startups re-domiciling back to India.
Right. We talked about that. Like companies like Meesho and Zepto are moving their legal headquarters back to India.
Exactly. And that's being driven by a few things. First, they're trying to take advantage of the increasingly attractive Indian IPO market.
So if they want to go public, it makes sense to be based in India.
Exactly. And it also simplifies their corporate structure, which is always a good thing.
So it's like a homecoming for these startups. They're coming back to their roots.
I like that, a homecoming. It really does feel like that.
Okay, so wrapping it all up, looking ahead to 2025 and beyond, what's the overall outlook for the Indian startup ecosystem?
Well, things are looking pretty bright. The expectation is for continued growth.
That's great to hear. More opportunities for everyone.
Totally. And we'll likely see more investment in those growth stage companies. The sectors that are hot now, like consumer tech, software, and SaaS and AI, those are going to remain key areas of focus.
So those are still good bets for investors.
Exactly. But we're also going to see those emerging sectors like semiconductors, energy transition, and deep tech start to gain more traction.
So those are the ones to watch, the future disruptor.
Exactly. And as those public market opportunities become more clear, those later stage startups are really going to prioritize profitability.
Makes sense. They need to show that they can make money if they want to attract those public market investors.
Exactly. So overall, it's a dynamic and evolving ecosystem, lots of opportunities, and I think it's a really exciting time to be watching the Indian startup scene.
So to quickly sum it all up for our listeners, the Indian venture capital landscape in 2024 was all about recovery, more funding, more deals, especially in consumer tech. We saw a more diverse group of investors getting involved. IPOs made a huge comeback. And there's a growing focus on profitability and even investments in those more traditional sectors. And the best part, the government is becoming more and more supportive of the startup ecosystem. So looking ahead to 2025, the expectation is continued growth, with those emerging sectors starting to take center stage.
It's definitely a market full of potential, so if you're interested in this space, it's a good time to be paying attention.
Absolutely. Well, Nikita, thanks for breaking all of this down for us.
My pleasure. It was a fascinating report to dig into.
Now, for all of you listening, if there are any specific reports or patent summaries that you'd like us to explore in future deep dives, just drop a comment below. We're always on the lookout for interesting topics to unpack for you here on Weekend Hustlers. Thanks for tuning in, everyone.